Hey guys, what's up? Alec back with the daily stock market, and look at that. We have Netflix down 25% after hours. That's absolutely insane to see a big tech stock like this down 25% after hours. And that could be a sign for what's to come for other big tech stocks that are reporting earnings this season. So make sure you stay throughout this entire video because we're going to talk about what this means, what price points I'm looking at to buy into Netflix, and some other things going on. We're going to talk about 3 to 4 other stocks that are reporting earnings soon and some updates. So make sure you slap a thumbs up on this video, subscribe with post notifications on so you're in the loop and alerted whenever these new fresh videos come out. So first up, Netflix down 25% and down 31% in the past month. Don't forget, this was like a $600 stock not that long ago, down 50% in the last 3 months. Okay, we see them at $681 per share in November, less than 6 months ago. Now, this was extremely unexpected. If you actually look at some of these articles and if you were reading recent articles leading up to what was going on, Netflix Q1 net subscribers unexpectedly declined, revenue misses expectations. Okay, the revenue didn't really matter. If you go towards more of the bottom part of this screenshot here, you see revenue 7.8 versus 7.9, wasn't that big of a deal. Earnings per share beat by about 20%. Okay, but remember, Netflix is like a growth stock and a huge growth story. So the net subscribers, they lost net subscribers, and they were expecting about a 2.5 million gain in net subscribers. So being a growth stock, investors want to see growth on the subscribers is one of the most important metrics to measure Netflix by. We're also going to jump into revenue and net income to see if that's growing as well. Now the PE ratio, because this isn't really a value stock, keep in mind this is more of a growth stock with more risk tied to it. But if you're looking on the value side of things, the PE ratio should probably be a little bit closer to 20 or 25 if you want a better deal. And the market cap would be a lot more attractive, under 100 billion or even closer to 125 billion. Now, overall, I think we've seen Netflix hit very hard in the last 5 years. The last time they were really in like the $250 price range, that was 2018. We can go back almost 5 years ago. All right, 4 years ago, we have 2018, which is crazy to think about. And remember how fast Netflix fell to a 4-year low just in about the span of 3 months. So in my opinion, Netflix could also turn around very quickly as well. I think anything under $250 per share is great for long term, especially if you plan on holding for 12 to 24 months. I think there can be huge rallies in Netflix as they put out more demanding shows. Right now is a little bit of a low period. We haven't had any huge hype since like Squid Games, for example. But once there's a huge show coming out and everyone's talking about it, more and more people are going to sign up. So I think that will earn some subscribers back. Also, they plan on announcing a video game segment. So once they become a leader in the video game space as well, they'll have a lot of new signups from that, in my opinion. You know, I think that Netflix could possibly get down to $190 per share, $180 per share. That's when I'm really going to step in and start loading the boat. Under $200 per share. I think that's an amazing steal for Netflix, especially for long-term holders, 1 year, 2 year, 3 year holds or longer. I think Netflix will continue to grow revenue and net income. And now they have lower expectations, and Netflix is one of those ones that always comes around with another banger show or movie. So it's just a matter of time before they put out another banger show like Squid Games and everyone downloads the app again and watches that TV show. Okay, so here is what is confusing about Netflix here. You look at the net income. Remember, we're at 2018 lows right now. And since 2018, we've had 47% growth on net income in 2019. We had another 53% growth in 2020, and we had another 81% growth in 2021. And we grew our net income from 1.1 billion in 2018 all the way to 4.8 billion in 2021. Now, if we go ahead and look at total revenue since 2018, we grew 27% in 2019, 24% in 2020, and 18% in 2021 to 29 billion. For a company that has been consistently gaining not even 1 year with a hiccup, okay, since 2018, 2021, I think this growth stock is being extremely undervalued right now, and that's what it is. It's a growth stock. So when you look at, metrics like PE ratio, those sometimes aren't the best thing to tell the story of what's going on, and everyone's focused on just subscribers, but yet their still net income is growing, their total revenue is growing, and if we look at some 2022 numbers, you can actually see that their total revenue for the quarter was 7.7 billion. And remember, they did beat on their EPS as well, so they are becoming more and more profitable. Also, their balance sheet, their assets from 2018 to 2021 have grown exponentially, and their ratio of debt to assets has lowered as well to 64%, which is what we're looking for. So overall, fundamentals and growth is looking solid on Netflix. I'd give them an A+. Anything under $200 per share is a heavy buy for my opinion, and I'm going to be loading up on all my long-term accounts under $200 per share on Netflix, even though I think there's probably a 70% chance that we will not see under $200 per share, and a 30% chance that we'll see $190 to $200 per share on Netflix. Okay, so now let's go over Tesla, because they are reporting earnings tomorrow, and everyone's wondering if that's what happened to Netflix, can the same thing happen to Tesla? And what we see here in the past month, they're up 11%. In the past year, they're up 41%, and they're still not even close to a 52-week low, unlike a lot of these other growth stocks and growth companies. Okay, so there's a strong possibilities that we can see a strong downward movement in Tesla tomorrow to $750 per share. But I'm also going to be going over some bullish things with Tesla as well. So stay throughout this entire segment so we can see both sides of huge unexpected thing happen with Netflix today. So there's a strong chance that whatever you're thinking was going to happen with Tesla tomorrow, something unexpected is going to happen. So keep that in mind. Personally, I'm not doing anything risky with Tesla going into earnings, but if they do dip to around $700 per share or $800 per share, I'll definitely be picking up a few shares of Tesla under $700 per share if that happens. Not saying it will. Okay, now we're going to go over, if you guys have Robinhood, by the way, you can see that these Q&As are pretty cool. So here you can scroll down and see that there's like 6 million shares represented. These people who are asking these questions, like this person owns 9 million shares in just this one question. Okay, so some of these questions are interesting. You can go over that. You can see my position, have $1,000. I want to up that a large amount, especially if we see a big dip tomorrow. We also see I have a $10 reoccurring buy. We also see a PE ratio of 200. So you thought Netflix had a big PE ratio and they weren't a value stock and they were just a growth stock. Tesla brings that to an extreme with a 200 PE ratio. They're obviously one of the biggest growth stocks, growth stories out there, with a $1 trillion market cap. Margins are in focus as commodity prices have soared. Shanghai factory shutdowns continue indefinitely. Berlin/Austin ramp important to growth story. As the market continues to focus on what Musk plans to do with Twitter, this week marks a more important point for the business. He actually controls of electric vehicle. Tesla will report Q1 result after the bell on Wednesday, and this will be a very important earnings with inflation fears and the Shanghai factory shutdown dominating the headlines. Investors have a lot to question on their mind. Okay, the more important item here for investors is the company's margin profile. So here you can actually see a bunch of the different margins, okay? And you can also pause that and read that point, but we have a lot of different points to cover in this article. So if you want to pause it and read some of it, that's totally fine. Perhaps the most important item investors want to hear about is Tesla's current production sales. The Shanghai factory has been shut down since late March, which is going to meaningfully impact the company's Q2 results. Even when Shanghai opens up again, it's expected to take some time to get back to full production, especially as the supply chain remains in limbo. This is also supposed to be the first quarter where Berlin and Austin factories contribute more than just a token amount of vehicles. It will be interesting to see the management details any current production run rates for these factories as they are a big part of Tesla's growth stories. With many investors not too concerned with near-term numbers, there will be plenty of questions asked about some of the major projects going on, and that's an important point. At the end of the day, a lot of people aren't focused on short-term numbers with Tesla. A lot of investors are holding Tesla for 5 years or more because they're concerned with that long-term growth story. And if you're a holder of Tesla, that should be your main holding point as well. So to go a little bit deeper into some key metrics, you can see Tesla's deliveries increased by a 67% year over year and a 0.5% quarter over quarter to 310,000 units in the first quarter of this year. Specifically, deliveries for Model 3 grew 61% year over year to 295,000 units in Q1, but declined marginally by 0.5% on a quarter over quarter basis. So it'll be interesting to look at those growth numbers, the deliveries. So remember, deliveries are going to be very important. Model 3 deliveries are going to be very important. We don't want to see another quarter over quarter decline on a marginally basis, okay? The company Model S deliveries expanded by 25% quarter over quarter and 600% year over year to 14,000 units in the most recent quarter, which is a great thing too, but that Model 3 is a lot more important to focus on. More significantly, Tesla's actual Q1 2022 deliveries fell slightly short of the sell side consensus forecasted of 312 units. In terms of sale volume, Tesla is likely to have been negatively affected by the COVID-19 lockdown in Shanghai, which began on March 28th, but this should be a very limited impact on Tesla's revenue given that the lockdown only happened last week of March. Okay, so this one's saying it shouldn't be that big of a deal. What is Tesla's forecast? It is more important to evaluate the expectations of Tesla full year 2022 results rather than just focusing on the upcoming quarter. Tesla is expected to expand the company's top line and bottom line by 54 and 57% to 82 billion on the revenue and $10 per share. EPS $10 per share. Wow, that would be insane to see that respectively for the future year 2020. And that's why, some of these growth companies have higher PE ratios, because if they're growing top line and bottom line and EPS by these crazy amounts, it makes sense to be valued at a higher number. Okay, there have been slight easing of pandemic restrictions in Shanghai, evidenced by the fact that some residents of Shanghai were allowed out of their houses and apartments following a 2-week shutdown, according to recent articles published on April 13th. But as long as China sticks to the COVID zero policy, there's always a risk that there could be tightening of COVID-19 restrictions or new lockdowns in Shanghai going forward. Okay, separately, new production facilities in Berlin and Austin should be positive for Tesla in terms of increasing the company's production capacity to meet future demand. According to an April 8th, 2022 SideCell report, Tesla is estimated to have run rate capacity for overall 2 million units annually by end of 2022, up from only 1 million they're doing today. Okay, thanks to Austin and the Berlin factories, but it's also inevitable that Tesla's profit margins will be hurt in the short term as the production facilities in Berlin and Austin will naturally be unable to run their optimal capacities in early stages of production ramp up. In summary, there are downsides to Tesla's revenue and earnings, which should warrant attention. It is necessary to watch the China-Shanghai COVID-19 situation and the progress of the Austin and Berlin factories closely to determine if Tesla can deliver a good financial performance for full year 2022. There's also wild cards going on with Elon and the Twitter stuff going on, and Elon and lithium and just a million things going on with Elon. Elon's in the news basically every single day. And other than that, you guys know my price targets that I'm looking to buy in at Tesla at. Nibbling at 800, buying heavier at 700, and buying the heaviest under 700 and into the 600s. If it does get to a 52-week low, that would be brilliant as well for long-term investors. Other than that, we have Procter & Gamble PG reporting earnings before the bell on Wednesday tomorrow. We also have Tesla. Obviously, we talked about United Airlines that are going to be reporting earnings same time as Tesla. On Thursday, we have American Airlines, AT&T, Union Pacific, And then after close on Thursday, we have Snapchat. And so comment which ones out of these you want me to go over, kind of like we did with Tesla before they report earnings. On Friday, we also have Verizon. So make sure you're subscribed with post notifications on for all my future content uploaded straight to YouTube. Smash the like button if you appreciate this video. Share with a friend for more content like this. If you want to get on my close friends list, now could be a good time to start buying stocks slowly and surely for long-term investors. And there's also some short-term momentum going on in the close friends list. We posted this one. We are up around 30%, 28% on this Intel option. And now we're up around 38% after hours. So if you want option calls and to make some short-term money as well, message me on Instagram. Go ahead and reach out to me. All right, guys, I'll see you in the next video. Remember, don't time the market, buy the market. Peace.